Episode 1, The Canadian Investment Marketplace, Introduction. Welcome, financial explorers, to Money Talks, your guide to the Canadian Securities Course. I'm your host, Rita, finance professional, and over the next 13 episodes, we're embarking on an exciting journey through the Canadian financial landscape. Whether you're a seasoned investor, a curious newcomer, or simply looking to understand where your money goes, this podcast is for you. We'll demystify complex concepts, break down formulas, and bring the Canadian financial market to life with real-world examples and engaging stories. Before we start, I just want to start with a disclaimer. This podcast is for informative and entertainment purposes. If you are intending to work in financial field or dealing with securities in Canada, please contact the competent bodies and get a formal training and certification. This podcast episodes are by no means a financial advices. Today, in our very first episode, we're laying the foundation, the Canadian investment marketplace. Think of it as the vibrant ecosystem where dreams of financial growth take flight. It's where individuals, businesses, and governments connect to exchange capital, fuel innovation, and build a stronger economy. But who are the key players in this bustling marketplace, and what roles do they play? Let's dive in. The cast of characters, key market participants. Every thriving ecosystem has its inhabitants, and the Canadian investment marketplace is no different. We have a diverse cast of characters, each with a unique role in the flow of capital. Understanding these players is crucial to grasping how the market functions. Investors, the capital providers. At the heart of the market are the investors, the individuals and institutions who provide the capital. They are the engine that drives economic activity. Retail investors. These are everyday individuals like you and me, investing our own money. Perhaps you're saving for retirement, a down payment on a house, or your child's education. Your contributions, no matter how small, collectively form a significant pool of capital in the market. Institutional investors. These are large organizations that invest on behalf of their members or clients. Think of pension funds, mutual funds, and insurance companies. They manage vast sums of money, making them powerful forces in the market. For instance, a pension fund might invest in a mix of stocks and bonds to ensure a secure retirement for thousands of employees, while a mutual fund pools money from countless individual investors to create a diversified portfolio. Intermediaries, the facilitators. Connecting investors with opportunities are the intermediaries. They make the process of buying and selling investments smoother and more efficient. Dealers. These firms buy and sell investments on behalf of investors. They act as brokers, executing trades and ensuring that transactions happen seamlessly. For example, if you want to buy shares of a Canadian company listed on the Toronto Stock Exchange, you'd typically go through an investment dealer. Advisors. Beyond just executing trades, advisors provide crucial guidance. They offer investment advice and manage portfolios for investors, helping them make informed decisions aligned with their financial goals. This could range from creating a personalized financial plan to actively managing a client's investment portfolio. Marketplaces, where the action happens. Just like a bustling farmer's market, there are designated places where the buying and selling of securities occur. These are the marketplaces. Exchanges. These are organized markets where publicly traded securities are bought and sold. In Canada, prominent exchanges include the Toronto Stock Exchange, TSX, which lists many of Canada's largest companies, the TSX Venture Exchange for emerging companies, and the Montreal Exchange, which specializes in derivatives like options and futures. These exchanges provide a centralized, regulated environment for trading. Alternative trading systems, ATSs. Beyond traditional exchanges, ATSs are electronic trading systems that match buyers and sellers. Examples in Canada include Chi-X Canada, MatchNow, and Omega ATS. They offer alternative venues for trading, often providing different pricing or execution models. Information processors and clearing agencies, the backbone. Behind the scenes, two crucial players ensure the integrity and efficiency of the market. Information processors, they gather and distribute vital order and trade information, ensuring that all market participants have access to timely and accurate data. This transparency is essential for fair and efficient pricing. Clearing agencies, these entities provide a centralized facility to clear and settle trades. They act as intermediaries between buyers and sellers, ensuring that securities and funds are exchanged correctly and efficiently after a trade is executed. They also act as a centralized depository of securities, reducing the physical movement of certificates, issuers, the capital seekers. Finally, we have the issuers, the companies or investment funds that sell securities to investors. They are the ones seeking capital to fund their operations, expand their businesses, or launch new projects. When a company issues shares, it's essentially selling a piece of its ownership to investors to raise money. The rise of high-frequency trading. In recent years, the Canadian investment marketplace, like global markets, has seen the rise of high-frequency trading, HFT. This isn't your typical investor making a few trades a day. HFT is made possible by the immense power of technology and involves the rapid buying and selling of shares using sophisticated algorithms. These algorithms analyze market conditions in milliseconds and execute orders at lightning speed. Imagine a stock market where decisions are made not by human intuition, but by complex computer programs reacting to tiny price fluctuations. HFT firms aim to profit from these minute differences, often holding positions for only fractions of a second. While controversial to some, HFT contributes to market liquidity and efficiency by constantly providing bids and offers. Conclusion. And that brings us to the end of our first episode, a foundational look at the Canadian investment marketplace. We've met the key players from individual investors to powerful institutions, from the facilitators who make trades happen to the marketplaces where they occur, and the essential backbone provided by information processors and clearing agencies. We also touched upon the technological evolution with high-frequency trading. Understanding these roles is the first step in navigating the exciting and dynamic world of Canadian finance. In our next episode, we'll shift our focus to the economy and explore how broader economic forces influence this very marketplace. So tune in next time for more Money Talks, your guide to the Canadian Securities Course.